The blockchain revolution has opened up new exciting possibilities and opportunities for entrepreneurs and businesses. But with great opportunity comes great responsibility. And that's no exception when it comes to taxes and accounting. If you're a Web3 business or you're starting a Web3 business, don't let taxes and accounting hold you back from success. That's why I've created this video to go over the top 5 tax and accounting tips for Web3 businesses. Web3 businesses need clear and accurate financial statements in order to accurately report their taxes and to make proactive business decisions. This means that you need to have your accounting system set up for both cryptocurrency and digital asset purposes, as well as having a traditional accounting system set up. And then these two accounting systems need to be connected so you have one accurate set of financial statements that show all of your company's activity, including your digital asset activity, as well as your traditional financial activity. The way you achieve this is by first establishing a digital asset accounting system, and then either through integrations with that digital asset accounting system software or through journal entries, you'll integrate your expenses, your income, and your gain and loss transactions into your traditional accounting system. So ultimately, you'll have a profit and loss statement and a balance sheet that show all of your activity for the year in a comprehensive manner. Again, this is key for both tax reporting purposes as well as making business decisions. It's crucial for Web3 businesses to properly track the cost basis for every digital asset that they own. This is a huge issue that I see with both businesses and investors over my years as a digital asset CPA. Number one is, you need to be doing your accounting on a regular basis. You should be doing it monthly. You should at least be doing it yearly. All too often, I'll have companies come to my firm that have neglected their crypto accounting and even their traditional accounting for years. Now, obviously, we can fix this for you, but it does create additional challenges in terms of getting the accounting fully accurate, making sure that you have all of your transaction documentation. And ultimately, this can impact you because tracking your cost basis across digital assets is a cumulative process, meaning that it's going to carry over from tax year to tax year to tax year. So we want to get it accurate because any inaccuracy in a current year can even lead to negative tax implications for you in future years. And a couple other things in terms of cost basis tracking. When you're receiving income as a Web3 business, you need to be very careful that this is getting treated appropriately for both accounting and tax purposes to avoid double counting it and actually paying taxes on this income twice. So when you receive this income, it's going to get taxed as ordinary income for business purposes. And that part should be straightforward, but that also is going to establish your cost basis in that asset. And that's very important that you're tracking that, because when you treat your business income as income, and then, maybe you receive that income in Ethereum, it gets treated as income initially. Then when you go to sell that Ethereum, you need to make sure that you're including that initial income in your cost basis so you don't get double counted on the sale of that asset. So if you receive one Ethereum for $10,000 and then in 4 months from now you go and you sell that Ethereum and it's only worth $5,000, you should be taking a $5,000 loss upon that sale. But that is contingent on you properly accounting and reporting your income and your cost basis for that initial receipt of the Ethereum and then the subsequent sale of that Ethereum. Another thing to keep in mind when we're tracking cost basis for Web3 companies is that your company may get 1099s for income that was paid to you from third parties. Now, that income on your 1099, you're going to want to report for tax purposes via the 1099. But that income also needs to get included in your cryptocurrency accounting. And again, when you're selling those assets that you received as income, you want to make sure that that cost basis is not getting double counted. So there's you got to be very careful with your accounting, reconciling your 1099s to your actual cryptocurrency accounting. So when you report that 1099 on your tax return, you want to make sure that when you're reporting other cryptocurrency income that may not have been included with your 1099, that you're not double counting that 1099 income and placing it on your tax return twice. So you want to be very careful in terms of tracking your cost basis, not double counting any income or double counting any cost basis, to ensure that you're paying the least amount of taxes as legally possible and that your accounting is fully accurate. Now, this mistake can lead to Web3 businesses doubling, tripling, even quadrupling their tax liability that they owe through just one mistake. And this mistake is holding your tax liabilities in cryptocurrencies and exposing your tax payments to validity and market risk. Unfortunately, I see this happen every single bull and bear cycle, where businesses and investors will receive cryptocurrencies or they'll sell cryptocurrencies for a large gain, and they may cash out into Ethereum, they may cash out into Bitcoin, and rather than taking at least their tax liabilities and converting that into USD or to a stablecoin to avoid validity risk, they hold their tax payments in a cryptocurrency such as Ethereum or another cryptocurrency. Then what can unfortunately happen is when tax time actually comes around and your tax payments are due, if the market takes a 50% drop, you've effectively doubled the tax payment that you owe because you're holding it in Ethereum. So you want to, at the very least, make sure that you're managing your tax payments appropriately and estimating them on a periodic basis and putting aside your tax payments in USD, and preferably making quarterly tax payments to the IRS and to your state taxing agency. This will avoid you holding your tax liabilities in a cryptocurrency and then exposing yourself to potential validity risks that can take place before your tax payment comes due. Now, if you fail to make this mistake again, this can double or triple your tax liability with just a couple moves in the market. So at the very least, you want to make sure that you're protecting your tax payments from validity risk. And outside of that, I have made separate videos on treasury management for Web3 businesses. You should watch those as well and consider additional steps to appropriately managing your treasury for cash flow purposes and considering the validity risk associated with holding assets in cryptocurrencies. Currently, this tax is being ignored by the whole Web3 industry, and it poses a huge risk in terms of unexpected tax liabilities as well as potential damage to a business's or an industry's reputation, and that is sales taxes. Believe it or not, if you're selling NFTs, depending on the state and your nexus, there may be sales taxes that you should be collecting and remitting to be in compliance with your state's sales tax agency. Now, I've done many videos on which states tax NFTs and when these taxes will be applicable, and I encourage you to watch those. But what you should understand is that there have been several states that have put out explicit guidance related to NFT sales taxes and when they apply within their states. And there's at least 31 states that I expect to apply sales taxes to NFTs who already apply sales taxes to digital products and services. In fact, in these states, NFTs most likely already are taxable for sales tax purposes, but we haven't been giving additional guidance stating this. But that doesn't mean that the existing sales tax regulations won't be applied to prior NFT sales. We've seen many states already take these steps, such as Pennsylvania and Washington, who have explicitly given NFT sales tax guidance and stated that their interpretations of these sales tax rules related to NFTs are interpretations of existing sales tax laws, which means they can go back and tax prior NFT sales. So there's a huge risk to Web3 businesses that are selling NFTs and not collecting sales taxes. These state sales tax agencies can come back and try to collect on those sales taxes and leave you as the Web3 business that didn't collect sales taxes with unexpected tax liabilities. Additionally, if these headlines start going out in the media that your company or the NFT industry as a whole is not appropriately collecting and remitting sales taxes, it's going to damage your businesses and or the industry as a whole's reputation. Lastly, if you're not collecting sales taxes and you're selling NFTs, you may actually expose your customers to unexpected tax liabilities in the form of use taxes. That's right, if sales taxes are not collected at the point of sale, in most states the customer is required to then pay use taxes associated with that purchase. So if you sell an NFT to one of your customers and you don't appropriately collect and remit sales taxes, not only is this creating a tax risk for your business, but it's creating a tax risk for your customer. So it's imperative to get into compliance for sales tax purposes if you're running a Web3 business. There are challenges with collecting and remitting sales taxes on the sale of NFTs, mainly collecting your customers' information at the point of sale and then calculating an accurate and appropriate combined sales tax rate in the native cryptocurrency at the point of sale, and then collecting this tax liability in the native cryptocurrency. We've automated this entire process with Digital Impost. Our software, created by our company Digital Impost, automates the entire sales tax lifecycle for NFT companies and Web3 businesses, from collecting their customers' information to collecting the appropriate sales tax rate in native cryptocurrencies to collecting all of the relevant information for tax reporting purposes and then actually filing the correct sales tax returns in the appropriate tax jurisdictions according to the appropriate tax deadlines. So it's imperative for Web3 businesses to get in compliance with NFT sales taxes so they don't expose themselves, their customers, and the overall industry to needless risk in terms of unexpected tax liabilities and damages to their reputation. It's imperative for Web3 businesses to avoid commingling funds so they don't have any tax or accounting headaches. Commingling funds means mixing personal funds with business funds. And unfortunately, this can be a fairly common occurrence if you're just getting your company started. You want to avoid doing this at all costs. You want to have all of your personal accounts separated completely from any of your business accounts. This is going to save you from two issues. Number one is if you are commingling funds and mixing your personal and business funds together, this is going to create an accounting nightmare because your accountant is going to have to manually go into your transactions, and most likely with some input from you, they're going to have to parse out which transactions are business purposes, which transactions are personal purposes, and then treat those appropriately for accounting purposes. Additionally, if you're commingling funds, this can create large tax issues too, depending on your overall fact pattern. And another way this can create tax issues is if you're transacting on personal exchanges or even in personal banks, but it's for business purposes, you may receive 1099s from those exchanges stating that personally you had X amount of funds that need to get claimed for tax purposes, but in fact those funds may have been for business purposes. And then you're going to be left in this conundrum where you need to report things for business purposes, but now you have tax documentation that's been reported to the IRS indicating that this isn't associated with business, that it's associated with you personally. So it just really can become a jumbled mess, both for accounting purposes and then as well for tax reporting purposes. And it's going to be a huge issue that you're going to need to sort out, that really with a couple proactive steps in the setup of your company's financials and your accounting system, you could avoid this completely. Now, you should take those steps, and those steps are to establish completely separate bank accounts, wallets, and exchanges for your business. Keep them separate from your personal accounts and only use these for business purposes. So what does that look like? You need to go, after you've set your company up, you'll have an EIN, an employer identification number for your company. and you need to go with your EIN and set up bank accounts under your company's name and your company's EIN as opposed to your personal name and your social security number. So first you want to set up bank accounts under your EIN. Next, you want to go ahead and you want to set up exchanges. They're usually going to be institutional accounts that you'll have to set up, and set these up under your EIN as opposed to your social security number. Then as a last step, you should create dedicated non-custodial wallets that are only associated with your business activities and never have any personal transactions go on them. So that's how you avoid this issue of commingling funds, is you have dedicated bank accounts, dedicated institutional exchange accounts, and dedicated non-custodial wallets that are only associated with your business and your business's EIN. This will help you avoid very large accounting headaches and very large tax headaches. So what risks are posed to Web3 businesses who are not properly handling their accounting and taxes? Number one is unexpected tax bills. If you're neglecting your accounting and taxes, inevitably there's going to be mistakes, there's going to be things that go overlooked, and ultimately these are going to impact your bottom line in the form of unexpected taxes and possibly penalties and interest. So number one is we want to stay on top of these things to avoid any unexpected tax bills that are going to negatively impact your cash flow. Another risk associated with this is if you have unclear financials, you're not going to have a clear picture of your business, and this can hurt you in multiple ways. Number one, you're not going to be able to make clear business decisions in terms of where your business should be allocating your finances, because you may not even have a full picture of what your financial position is. Likewise, if you're working with investors or seeking investors, if you don't have a clear set of financials, they're not going to be able to assess the financial health of your company, and as a result, they may not even take your business as serious as they should due to your lack of quality financial statements. So these are two big risks, is unexpected tax liabilities that can negatively impact your cash flow, and the fact that if you don't have clear and accurate financials, there's no way you or investors can make any clear business decisions regarding your business. Additionally, these types of issues can lead to negatively impacting your reputation as a business and as a business owner. So there are very large risks associated with not getting your taxes and accounting in order. So even though it may not be your number one priority when you have a lot of competing priorities as a business owner, it's imperative that you get your accounting and taxes handled appropriately. Camuso CPA saves you money, time, and peace of mind. We work with Web3 businesses and digital asset investors to save them thousands and cumulatively millions of dollars on taxes with effective tax planning strategies, accurate accounting, and proactive advice. Our firm has been working with digital asset investors and businesses since 2016, and we were the first CPA firm to accept cryptocurrency as a form of payment for professional services. Any service that you need related to taxes or accounting for digital assets and Web3 businesses, Camuso CPA has you covered.